Imagine waking up tomorrow morning to discover that oil has disappeared from the headlines. No panic at gas stations, no endless lines stretching around city blocks, no governments begging people to drive less. Everything looks strangely normal. But beneath that calm surface, something enormous is moving. Something that has happened many times before is quietly building again. And the most terrifying part isn't that an oil crisis is coming, it's that almost nobody seems to believe it anymore. For decades, the world has lived with one unforgettable memory. Whenever conflict erupted in the Middle East or a major producer cut supplies, markets exploded, prices doubled, inflation spread like wildfire, entire economies stumbled. The phrase oil crisis became a symbol of fear. Yet today, wars continue, shipping routes face constant threats, political tensions grow every month, and somehow the catastrophe everyone expected never fully arrived. That raises an uncomfortable question. What is holding everything together? And what happens if that invisible support suddenly disappears? To understand this mystery, you have to travel back to a world that looked very different. It was a time when cheap oil fueled unstoppable optimism. Highways stretched across continents. Airplanes became symbols of freedom. Massive factories ran day and night. Every country wanted more growth, more production, more consumption. Oil wasn't just another commodity, it became the heartbeat of modern civilization. Without it, nearly everything stopped. Cars, ships, trucks, plastics, medicines, fertilizers, even the food on supermarket shelves depended on it. Humanity built an empire powered by black liquid buried beneath the earth. But nobody stopped to ask what would happen if that heartbeat became unstable. Then reality arrived like a thunderstorm. In the early 1970s, political conflict turned oil into a weapon. Supply was restricted. Prices exploded almost overnight. Families watched fuel stations run dry. Governments imposed emergency measures. Businesses struggled to survive. Inflation crushed household budgets while unemployment climbed. The world suddenly realized something terrifying. It wasn't running the oil market. The oil market was running the world. And that single realization changed economic history forever. But the real problem was only beginning. Leaders everywhere made a promise: never again. Countries rushed to build emergency oil reserves. New drilling technologies were developed. Energy companies searched every corner of the planet. Engineers improved fuel efficiency. Nations diversified suppliers. Investors poured billions into exploration. It looked like humanity had learned its lesson. Every crisis seemed to create a stronger defense against the next one. Confidence slowly returned. Markets stabilized. The world believed it had become smarter than history itself. But history has a habit of waiting patiently. As decades passed, oil demand continued climbing. Emerging economies transformed into industrial giants. Millions escaped poverty. Hundreds of millions bought their first cars. Airlines connected cities that had once seemed impossibly distant. Global trade expanded at breathtaking speed. Every success story quietly depended on the same thing: reliable, affordable energy. Oil producers made fortunes. Governments built massive budgets around petroleum exports. Financial markets assumed supply would always be available somehow. The machine looked unstoppable. But hidden beneath the celebration, tiny cracks were already beginning to spread. Those cracks weren't obvious because technology kept delivering miracles. Hydraulic fracturing unlocked vast reserves in the United States. Offshore drilling reached unimaginable depths. Giant tankers crossed oceans carrying millions of barrels every day. Suddenly, Countries that had feared shortages found themselves swimming in supply. Analysts declared that the age of permanent scarcity was over. Oil prices even collapsed at times because there was simply too much production. Consumers celebrated lower gasoline prices. Politicians relaxed. Investors chased other opportunities. It felt like the old nightmare had finally ended. But appearances can be dangerously misleading. Then something extraordinary happened. Instead of a shortage, the world experienced an event almost nobody imagined possible. Demand collapsed. During the global pandemic, roads emptied, airports fell silent, factories slowed, millions stayed home. Oil storage tanks filled faster than anyone expected. At one unbelievable moment, US oil futures actually traded below zero. Traders were paying others to take oil away because there was nowhere left to store it. The impossible had become reality. People laughed at headlines they never thought they'd see. Many assumed oil would never dominate the world again. But nobody could have predicted what came next. As economies reopened, demand returned with astonishing speed. Factories restarted, air travel surged, consumers rushed back into stores. Shipping companies struggled to keep up. Energy consumption exploded almost overnight. Yet production couldn't recover as quickly. Years of underinvestment had quietly reduced future capacity. Companies that had once drilled aggressively became cautious after previous price crashes. Investors demanded profits instead of endless expansion. Banks became reluctant to finance risky fossil fuel projects. The world wanted more oil, but fewer people wanted to invest in producing it. A dangerous imbalance was beginning to form. Then geopolitics entered the stage once again. Sanctions, military conflicts, pipeline disruptions, attacks on shipping lanes, diplomatic rivalries, and economic warfare created wave after wave of uncertainty. Every headline seemed capable of triggering panic. Experts warned that another historic oil crisis was inevitable. Television networks prepared for disaster coverage. Traders braced for massive shortages. Governments feared another inflation shock. Yet, something strange happened. Prices moved, markets reacted, but civilization kept functioning. The catastrophe everyone predicted refused to appear. That mystery left economists scratching their heads. The answer wasn't simple. It wasn't one miracle or one brilliant decision. It was a collection of invisible safety nets built over decades. Strategic petroleum reserves stood ready for emergencies. Producers outside traditional regions increased output. Global shipping adapted faster than expected. Some buyers quietly found alternative suppliers. Others reduced consumption through efficiency improvements. Renewable energy, while far from replacing oil completely, lowered demand growth in important sectors. Every one of these factors acted like a rope holding back an enormous weight, but every rope has limits. Meanwhile, another silent transformation was changing everything. Modern economies became far more efficient than those of the 1970s. Today's vehicles travel farther using less fuel, buildings waste less energy, manufacturing processes consume fewer barrels per unit of output. Digital industries generate enormous wealth while using comparatively little oil. The world still depends on petroleum, but each dollar of economic activity requires less of it than before. That efficiency became an invisible shield against disaster. Yet, shields don't make armies invincible. Markets also became astonishingly sophisticated. Advanced financial systems allowed companies to hedge against price swings. Airlines locked in fuel costs years ahead. Refineries diversified supply contracts. Governments coordinated responses more effectively than in previous decades. Information traveled instantly instead of taking days. Traders adjusted expectations before physical shortages spread. These improvements prevented panic from spiraling out of control. But the real problem wasn't panic anymore. It was complacency. Complacency is dangerous because it whispers comforting lies. It tells investors that technology will always rescue them. It tells consumers that gasoline will always be available. It tells politicians that someone else will solve future shortages. History shows that civilizations rarely collapse because they lack intelligence. They stumble because confidence slowly replaces preparation. Every year without a crisis makes the next one feel less likely. And that is exactly when risk becomes most dangerous. There is another reason the feared oil crisis hasn't arrived yet. Demand itself is changing. Electric vehicles are slowly replacing gasoline powered cars. Renewable electricity continues expanding. Batteries become cheaper. Companies invest billions into alternative fuels. Every year, oil loses a tiny piece of its monopoly. That gradual transition reduces pressure on global supplies. But transitions are messy. Oil demand hasn't vanished. Billions of people still rely on it every single day. Trucks deliver food. Ships carry products across oceans. Aircraft connect continents. Agriculture depends heavily on petroleum based fuels and fertilizers. The old world hasn't disappeared, the new one hasn't fully arrived. That creates an uncomfortable middle ground. Producers hesitate to invest because they fear future demand will decline. Consumers continue relying on oil because alternatives remain incomplete. Investors wonder whether to fund new drilling projects or renewable infrastructure. Governments face impossible political choices. Build more pipelines and face environmental criticism. Invest only in green energy and risk supply shortages before the transition is complete. Every decision carries enormous consequences. Every delay increases uncertainty. Then there is the psychology of markets. Oil prices aren't determined only by supply and demand. They are driven by expectations. Fear can push prices upward before shortages exist. Confidence can keep prices stable even when risks multiply. Traders constantly ask one question: what will everyone else believe tomorrow? That emotional battle creates extraordinary volatility. Sometimes perception matters almost as much as physical barrels flowing through pipelines. Imagine standing inside a control room responsible for powering the modern world. Thousands of indicators flash simultaneously. Tankers cross oceans. Pipelines pump millions of barrels daily. Refineries operate around the clock. Satellites monitor shipping routes. Traders analyze every political speech. Military commanders protect strategic waterways. Engineers inspect aging infrastructure. Economists predict demand months into the future. It looks like a perfectly synchronized machine. Yet one unexpected disruption in the wrong place at the wrong time could send shockwaves across the planet. That possibility never truly disappears. Perhaps the biggest surprise is how resilient globalization has become. Supply chains that once depended heavily on single regions have diversified. Countries increasingly seek multiple energy partners instead of relying on one source. Emergency planning has improved. Coordination between governments happens faster. Businesses maintain larger inventories of critical materials. Every lesson learned from previous crises strengthen the system. But stronger systems can still break when pressure exceeds their design. History is filled with moments when people believed old dangers had vanished forever. Financial crashes seemed impossible before they happened. Housing markets appeared unstoppable until they collapsed. Technology bubbles convinced investors that traditional rules no longer applied. Again and again, confidence reached its highest point shortly before reality intervened. Oil may be different in many ways, but human psychology rarely changes. What makes today's situation so fascinating is that both optimists and pessimists have convincing arguments. Optimists point to innovation, efficiency, renewable energy, diversified supplies, and smarter markets. Pessimists point to underinvestment, geopolitical tensions, aging infrastructure, extreme weather, growing global demand outside developed nations, and the fragile balance holding everything together. Both sides see the same facts. They simply tell different stories about the future. Maybe that's why the long awaited oil crisis hasn't happened yet. Not because the danger disappeared, but because humanity quietly spent decades building layers of protection after previous disasters. Every reserve tank, every efficiency improvement, every technological breakthrough, every diversified supply route, every smarter trading strategy became another barrier between society and chaos. Those barriers have worked remarkably well, better than many people realize. But barriers create another illusion. The longer they succeed, the easier it becomes to believe they are unbreakable. Budgets shrink, maintenance gets delayed, investments slow, warnings receive less attention, risk slowly returns wearing the mask of stability. And by the time everyone notices, options become painfully limited. The greatest lesson isn't really about oil. It's about how civilizations respond to fear. Crisis forces innovation. Innovation creates confidence. Confidence breeds complacency. Complacency invites new risk. Then history begins another cycle. The absence of disaster doesn't always mean danger is gone. Sometimes it simply means the countdown is still running. One day, people may look back at this era and say the world escaped another oil crisis because it prepared better than ever before. Or they may say the warning signs were visible all along, hidden beneath years of calm headlines and temporary success. Nobody knows which story will become history. But perhaps the most valuable lesson is this: the biggest crises rarely arrive when everyone is expecting them. They appear after years of comfort, confidence, and quiet assumptions that tomorrow will look exactly like today. And if the world has avoided the next great oil crisis so far, the real question isn't whether we've become invincible, it's whether we've simply been given a little more time.